Hi, traders. As we recently wrote in a detailed post on our free Telegram channel, the fact that the US government has now reopened does not mean that the impact and confusion caused by the delayed US data releases during the shutdown will now be resolved quickly and conclusively. Please go back to the aforementioned post titled Market Lag for more information. As an example of how difficult it currently is, even for the smart money, to get their heads around unprecedented uncertainty and volatility in the markets, let's take a look at this past Thursday's NFP release. As you can see, the release of the report caused no significant reaction off the knee jerk on the release or afterward. In fact, we also saw little in the way of manipulation before the release, which was surprising. At this past Friday's close, price action still looked unsure of its next powerful trendy move, either back to our manipulation pivot level at 4,231 or the 3,800 level. Price is currently closer to the former level than the latter. But does that mean anything? No, never assume anything when it comes to the gold market right now. We need to focus our attention on technical analysis and use the fundamental context as more of a secondary guide, since that environment is still foggy as far as professional market participants are concerned. Now, we do have panic in Wall Street at the moment over fears of a potential market crash, so we will be keeping a close eye on that, as nothing clears the fog quite like a market crash in cascading shorts. In the meantime, wise trading heads should still reduce typical position sizes and ensure that they preset a stop loss on each and every position opened. For the short term price action view after market open, we will be tracking price to stay ahead of where it will push to, with momentum first between the two levels drawn on the H1 chart up on the screen. Keep a very close eye on EMA5 and where that breaks and locks. Have a safe trading week, and we'll see you next time.